So for this rest of the, for the financial statements at least, we will only be needing the financial forms because in order to use to create the financial forms, you're going to be needing your adjusted trial balance, okay? And then when we go into each and every single worksheet, so the first one is the income statement. That one, you're going to need your adjusted trial balance. And your statement of equity, you will also need your adjusted trial balance. However, when we move into the balance sheet and the statements of cash flows, that's where we may need to pick out from our unadjusted trial balance to be able to make sure our numbers pan out good, okay? So starting for the very first one here, we just need our adjusted trial balance to be able to complete our income statement, okay? So the income statement consists of all this information right here where we need to solve for our expenses and our revenues. So the very first one here is we need our total sales. Now remember, when we're looking at this table, we're not looking at debits and credits anymore. We're just purely looking at we're just looking at purely the debit. We're just looking at using this table to just do our calculations here. Left and right doesn't mean anything in this table. So sales, what I'm going to do is I'm going to keep all my calculations, right? If I need to, I'll do my calculations on the right side, or the totals on my right side, and the calculation's going to be on the left side. Okay, so for the first one, is going to be operating income, which is your sales. So in this case, what was my total sales that I've incurred on my adjusted trial balance? So here, sales is down below. Okay, so over here. So my total sales is 30,549. Okay. Things that take away my sales is going to be my sales returns and allowances and my sales discount. So let's go ahead and take a look at my adjusted trial balance. My sales returns and allowances, okay, was for $19.96, and for my discount, it was for $1,989. Okay, so these things subtract and decrease your actual sales. So what was my actual total sales that I had for the month of June?
$28,579.84. Oh,
I have 64.
yeah, I got the same number. I think I don't know what happened.
Oh, okay. All right, good. All right. So that is from our total sales. Now, things that we have to counter them against is going to be, the very first one is directly correlated to inventory, which is going to be your cost of goods sold and your cost of materials. Now, these you have to subtract. Okay, so what was the total cost of goods sold in your adjusted trial balance? Total was 40,000, okay? Or sorry, 4080. And then your total cost of materials was for 1040, okay? So now let's go ahead and see what your gross profit is by taking your total sales, subtracting out your cost of goods sold and your cost of materials. So what is your total gross profit?
$23,458.79. 78.
Good. Okay. So now this is where we need to counter them against. So all of this, right? We need to make sure, is this 28,000 in, 23,000 enough to cover all of our expenses that we incurred in order to operate the business? So what do we need to do? We need to list out every single operating expense that that we had to charge or we had to pay for the business. So starting with all expenses. So starting with the first one is going to be, I think it's our first expense is going to be advertising expense. Okay. So I'm going to put it on the left side so we can make a nice column to add up all of our expenses. And then on the right side, I'm going to have the equal sum for all the expenses. Okay. So the first one is advertising expense was for the total amount of 185. Okay. The next one account that we're looking at is going to be your bank fees. Bank fees cost me a total of $68.30. Next one is going to be business expense for a total of $1,282. Okay. Next thing that's on here. Okay, so we have business expense, freight expense is 0, so you don't need to include it. Next one we have here is insurance expense for 195.83. Then we have interest expense for 101.34. Okay. Then we have labor expense for a total of $2,142. Then we had license and permit expense for $375. Then we have loss on disposal of assets for $2,000. Then we had office supplies expense for $70. Okay. Then we had, the adjusted. We had the payroll expenses for a total of, let's see, payroll expenses for now a total of $1393.94. Okay. Then we have payroll expenses, purchase expenses 0. Okay. Purchase returns is 0. We have rent expense for $1,500. Then we have bad debt expense, okay, for $76.60. I'm sorry, yeah, bad debt expense for $76.60. Then we had depreciation expense for $625.95. And then we had amortization expense for $11.67. Okay. Gonna insert another extra row here. Okay, so here I'm gonna go ahead and type in over here that I have total operating expenses. Okay. So in this case, right, we need to equal sum all of my expenses and make it negative. Okay, so equal negative sum of all of these operating expenses. Okay. And I get a total of negative 10,288.41. Okay. And then I'm going to format this real quick because I want to see them with dollar signs. We're going to do some accounting. There you go. Right? So I have negative $10,228.41. Last but not least, we have some other income, which is my delivery income, right? Delivery income, which increases my revenues, which was a total of, let's see, delivery income. Delivery income, which was $300. Okay. So now let's go ahead and complete my profit or loss here by calculating this, okay? So I'm going to take my gross profit of 23,458.78, okay? I'm going to add my operating expenses of negative 10,228.41, and I'm going to add $300. Okay, giving me a grand total of 13,530.37. Okay, did anybody else get this answer too?
Yes.
Okay, so 13,530.37 is going to be my total net profit. Okay, so this number is going to come is very important. Okay, so that is how we complete the income statement like this. Okay, all right. So now, next step here is to complete my statement of equity. Okay, because we had a net profit, right? Our choices is what do you want to do with that? Do you want to reinvest into the company or do you want to take away from the company? In this case, I'm going to add it. I'm going to reinvest in my company because it's the very first month of the it's the very first month. I should reinvest the money back into the company so then I can expand and grow my company more. So starting from here, equity ending balance as of June 1st. What was my balance? It was 30,000, right? We deposited the money in the bank, but we had the original investment of $30,000. Okay, so locate your equity. Okay, here's my equity. Wait, hold on. Yeah, owner's equity. It was for $30,000. Okay. Net income will always increase because we're reinvesting the profit back into it. And where do we get that number? Well, we get that from here, from our income statement, right? This is our profit. So we're adding the $13,530.37. However, we also had to take out some money. So let's see, how much did we take out? We took out $3,000. So here, what is going to be the total equity that you either have to add or subtract? So we would take the difference between the profit and the withdrawal here. That means I am going to be entering or adding $10,000 to my equity. Okay, I'm adding $10,530.37 to my equity, which gives me a grand total of equity to be the end of June 30th to be $40,530.37. Okay. All right. So my new equity is 40,530.37. Okay. All right. So that's how you complete the statement of equity. All right. Now, the next statement we have to do is the balance sheet. The balance sheet, again, tests the accounting equation. So we need to take all of our assets and put in all of our liabilities. And then, of course, last but not least, we have our equity, right? We solved our equity in our previous worksheet here, right? And that's going to be your new equity balance. So what I need to test here is, does my total assets equals my liabilities? And then the equity that we just have right there. So let's go ahead and go through each and every single account in my assets, okay? Starting in your adjusted trial balance. our very first asset we have is my bank account. Okay. And what is under my bank? So what I'm going to do is left side is your assets, right side is going to be your liabilities and equity. Okay. So here, my bank account has a total of $13,952.50. Okay. Next account that I have is my accounts receivable. Okay. Currently holding a balance of $14.55 35. Okay. Um, okay. Next account we have is our business supplies. Okay, which is currently at $510. Okay. Next account I have on the list is office supplies for 80. Okay. Next account I have is inventory. My inventory is currently at a total of $540.64. Okay. My next account I have here is my furniture, which is currently standing at a total of $8,926. Okay. The next account I have here is my office equipment, currently standing at $27.67. Okay. Next account I have is my equipment for $8,485. Okay. Next asset I have after equipment is vehicles, right? My vehicles is currently standing at $31. Okay. And my, what's next? I have prepaid accounts currently at my prepaid accounts is 665417. I have my deposits at 1700. Oops. 1700. And then I have Goodwill currently at the 28 or 2088.33. All right. Go ahead and equal sum this. Equal sum. Remember, we're not calculating total debits and credits here. We're just calculating what your total assets are. And in this case, I get a grand total of $79,111.85 worth of assets. Okay. So I'm going to carry this value down below so that I can double check to see if my assets equals my liabilities and my equity. Okay. All right. Now time to list out all of your liabilities. Okay. So all your liabilities are going to include, first account we have is accounts payable. Okay, I'm going to put this on the right side, okay, which is currently at $6,620.91. Okay. Then the next account is Visa payable, which we have nothing there, so you don't need to include it. We have a notes payable for $649.49. Okay. We have payroll liabilities. Okay. For the 700 for the 791.54. And then we have, let's see, we have sales tax payable, okay, for sales tax payable is for the 2046. Okay. We have interest payable for the 101.34. And then last but not least, we have our loans. That is currently at the 28,37709. So I'm going to go ahead and tally up my totals for my liabilities. Okay. And I get a total of $38,581.48. Okay. Right here, I'm going to go ahead and put owner's equity. Okay, and put this, okay, so owner's equity, right, which we're going to copy this from our statement of owner's equity here, because that's our new equity. And now I'm going to add these two numbers together, the $38,881 plus my $40,530 to give me a grand total of $79,111.85. And there we have it. Our total assets equals our total liabilities plus our equity. So that means, yay, we're seeing everything match up, right? Starting with the income statement, then starting with the equity, then starting with the balance sheet, okay? And each sheet is connected to each other, okay? All right. Awesome. Okay, so now that we finished the balance sheet, the last statement that we need to complete is going to be the statement of cash flows. Okay? The statement of cash flows is the most trickiest statement to try to understand, especially because when we're taking a look at this, right, we're literally taking a look at how much actual cash is flowing into the company and how much cash is flowing out from the company. Okay? Now, there's a few rules and regulations that you need to know before we can actually complete this, because there's, again, a lot of extra things here. Now, the statement of cash flows is taking an accrual type base of a company and converting it into a cash basis company, okay? So this is where we're taking a look at how much actually cash did we earn from revenue? How much cash did we actually spend to invest in our company? Okay? So this is where we're going to go ahead and take a look and start calculating our worksheet here. Now this is a combination between the income statement and the balance sheet. Okay, so that means this is all of the accounts. Okay, however, because there are some numbers that are adjusted, we actually have to also take a look at our unadjusted trial balance to get those correct book value that we started out in the beginning of the year, right? Or the historical cost value of all of our assets and et cetera, et cetera. So in this case, right, how do we format or how do we piece together all of our information? Okay, so how does this worksheet start? It starts off with your net income, all right, which we know because that comes from our income statement, right? So that's the part from the income statement that we need to use, is that we had a net profit of the $13,530.37. Now, in this case, right, this profit includes things like accounts receivable, which is money we haven't collected yet. So in this case, this is where we need to break it down and be able to tell me how much cash did I actually get from this actual profit. But not only that, we also include other factors such as expenses that were considered non-cash transactions, okay? Now, what does that even mean? Well, let's think about it, right? Let's take a look at our income statement. The question here is, did we actually have to spend money in order to have bad debt? Did we actually spend money in order to depreciate an asset?
No.
No, we didn't. So in this case, right, that's considered a non-cash transaction. And what we have to do is we have to add it back into our pot of money because we actually never spent the money. It's called a non-cash transaction. So here we have three of them. We have bad debt, depreciation, and amortization. So that's the first thing that I'm going to do is I'm going to recognize that I have non-cash transactions, and that needs to go back into my net income. So first one I had was, so income statement was the bad debt expense, and then we had the depreciation expense, and then we had the amortization expense. Okay? And these values are going to be added back into your pot of money. Okay? So I'm going to, once again, I'm going to have the left side be all the list of all the information, and then the right side will be the calculations. So in this case, right, my bad debt was for a total of the 7660. Remember, this is going to be added back into the pile because we never spent the money to incur these expenses. So we need to add it back into the pile of money. Okay. So we need to add back the depreciation of the 625, and then we need to add back the 1167. Okay. So we have to add it back into the net income because we never spent it. Okay. Now the next section is going to be taking your balance sheet, and we're going to split them up and categorize it between the different little sections here. Okay, we have 3 categories that we must organize our income statement and our balance sheet in, which is going to be number 1, operating activities, okay, which is going to be your current assets, your other assets, and it's going to also be your current liabilities, okay, because those were the ones that we needed to use in order to operate our business, right? Hence, operating activities, okay? The second section, which is your investing activities, is going to be your fixed assets. Okay, your fixed assets, because that's what you invested into your company in order to do the job, right? What are the things that you invest into the company? And then your financing activities is going to be anything that has to do with your equity and long-term liabilities, right? In this case, we took a loan, right? A loan is going to be something that you had to use in order to finance your company, right? Equity, right? We had to put an original investment, which is going to increase your to finance your company, okay? So that's what we're going to do. So it's split into those 3 sections. So starting with the first one, it's going to be your current assets. Now, how we're going to take each and every single account and figure out what those pieces mean when it comes into introducing it, into categorizing it into these sections. What makes it what are the necessity things that we have to understand? Do we have the cash or do we not have the cash? Okay, so let's take a look at our balance sheet one more time. Okay, our first one is going to be our accounts receivable account. Okay, we're going to ignore the bank because this right here is what's going to be most important towards the end of the actual statement of cash flows, right? Because we're testing to see how much cash should we end up, right? And this is going to be the very last thing that you enter into the statement of cash flows. So the first account we see here is going to be the accounts receivable, okay? So that's the first thing I'm going to add here, right? Is my accounts receivable. Now, accounts receivable is when customers owe us money. Now, in context, right, if we're looking at an accrual basis versus a cash basis, let's understand this. If customers owe us money, do we actually have the money or do we not have the money?
We don't.
We don't have the money, right? And that money is included into this net income right here, right? Because this net income includes all sales, whether it was cash sales or whether it was credit sales. So in this case, I need to subtract that money because I never received it in the first place. All right? This is cash I never received, I never had. So in this case, right, I have to subtract this value out. Okay? Now, in this case, the one that's on your balance sheet is an adjusted version. Okay? This 1455.35 includes that allowance for doubtful accounts or that bad debt expense of the 7660, right? But in this case, right, we already counted that back into the system, right? That's the first thing that we did was recognize that that bad debt was taken out. So now we have to include it back in. So therefore, this number right here includes that number. So we have to actually go to our unadjusted trial balance to figure out what was the total amount of accounts receivable prior to calculating the bad debt, which in this case is 1531.95. Okay, that's the number you want to subtract out because this is the total amount of cash you never received. All right? Right? So that's how we have to understand this. Okay? Second account that we have in our balance sheet is going to be my business supplies. Okay? Now, business supplies. You had to use cash in order to obtain those business supplies. So is that cash that you have right now? No, because you had to spend money in order to obtain those business supplies. So in this case, is that cash that we have? It is not. So we need to subtract that money out because we don't even have $510 anymore, right? We already incurred and paid that $510 with cash to buy these business supplies. So in this case, it is a negative to you, okay? Next thing we have here on our list is going to be our office supplies. Once again, same idea. We had to buy our office supplies, right? So in this case, this $80 that we have here is something that we had to already spend to have. Okay. And then next account here is going to be inventory. Okay. Once again, we had to purchase our inventory. So that is something that we had to spend our cash to obtain. And on top of that, since it's holding in our accounts, right? Did we sell them and gain money out of them? No, not yet. We haven't. We're still holding on to it. So therefore, we didn't generate any income off of these inventory items. So we have to subtract out my inventory. Okay? All right? All right? Because we spent money in order to obtain these items. Okay? So now the next section we have here, right? Let's continue on in my balance sheet and going down the list. All right? Next, I have furniture, office equipment, and vehicles. Like I've mentioned before, right? Those are all fixed assets. So all of those are going to be down below under the investing activities. Okay? Because that's the money that we took to invest into our company so we can either produce revenue or so on and so forth. So in this case, we're going to skip over our fixed assets and we have prepaid accounts. Once again, we had to spend money in order to have things like rent, insurance, okay? So in this case, that was we already paid for it. So therefore, we do not have this $6,654. We have to subtract it out. Okay? Same thing with our deposits. Right? Since we already spent the money to insure our water and our rent, right? So therefore, we don't have the $1,700. Okay? And the last one we have here is goodwill. Okay? Now let's take a look at this goodwill because in this case, once again, we purchased the business name, right? We had to spend money, so we don't have it anymore. However, let's take a look at this version, right? It's currently at 288. Once again, because this one we amortized it, right? We already added back the amortization from previous, right? We recognize this was a non-cash transaction. So how much money did I actually spend to purchase for goodwill? I would have to go to my unadjusted trial balance to be able to figure that number out. And my goodwill before the amortization was for a total of 2,100. Okay? So again, we have to think about it this way, right? Do we have the money anymore? No, we spent it in order to obtain it. Okay? In other words, in the account receivable, we don't have it because we never received it. Okay? All right? Good so far? Okay. So the next section we have here is going to be your current liabilities. So let's take a look at my balance sheet once again. My current liabilities, starting from the top, is accounts payable, right? Accounts payable is money that we owe to other people. Now, in this case, right, when we take a look at our balance sheet, we owe $6,620.91. Now, we owe that money. Did we spend it yet? Or have we paid our liabilities yet?
No.
No. So that means we have this cash, right? We didn't spend it yet because we have liabilities. We still owe the money. Did we pay it out yet? Not yet. So in this case, I need to add this number back, okay, into the pile of money because I never spent the money in the first place. Okay? All right. Next account we have is notes payable. Same ordeal here. Did I spend the 600 or did I pay off the $649.49? No, not yet. Okay? And that's going to go for all of your current liabilities, right? Payroll liabilities. Did you pay the government yet? And your employees? No, you haven't. So that means you still have the $791.54. All right? And then let's see what else. Did you pay for sales tax? Not yet, right? We still have this money because we haven't made a payment yet. Okay, we still have the $2,046.11. And then last but not least, did we pay my interest to the credit cards yet and the loan? In this case, no, we haven't because we just calculated and accrued it, but we still haven't paid our liabilities yet because instead we just recorded the bill. So in this case, do I still have? I haven't paid my interest payable yet. So in this case, I still have that $100.34. Okay? So now we need to figure out what our net operating activities are. So I'm going to go ahead and equal sum this real quick. Okay? So I can get a total of the operating activities. And then I'm going to figure out what my net value is after that. Okay? Okay? So I'm going to go ahead and equal sum this, right? All of your current liabilities, all of your current assets, and your other assets, starting with this, including the non-cash transactions, right? I'm going to add all of these up together, and I get a total of negative $2,193.25. So now I need to solve for the net amount. So I'm going to take my income, right? And I'm going to, in this case, I'm going to add a negative, right? Because I have to subtract out the $2,193.25 to get a grand total of now 11,000 for net operating. Okay, so this is what the result is after you've incurred all of your operating activities. Okay, so you are still left remaining with $11,337.12. Okay, all right, everyone good so far?
I'm having troubles doing the equal sum, and each time I put the equal sign, it just puts it, it doesn't register it. Like it just leaves it blank.
On this side?
Yeah.
It's because you have to change the font's color. I had it white or clear, so you just have to change this
Okay.
to black font,
Okay.
and it should appear. Okay, all right, all right. So this is what we're trying to do, is seeing how much cash that we have in our bank account, things like that. Okay, so right now we are at $11,337.12. Okay, that's after the operating activities. Next section we have here is going to be investing activities. So as I've mentioned this before, right? Investing activities is going to be anything that you invest into the company, such as fixed assets. Okay? So going back up here, we purchased furniture. Okay? We also purchased we purchased no balance sheet. We purchased some office equipment. We purchased some regular equipment. And we also purchased vehicles, right? We purchased a truck. Okay. Now, let's take a look at my balance sheet one more time, okay? These values that we see right here are all the values of the current book value after depreciating 1 month's worth of depreciation, right? Because we used it for 1 month. So these numbers we cannot use because they're not historical cost values, right? Because in this case, the question that we're asking here is how much did you spend in order to invest in these items? In this case, right, when we talk about spending money, we're talking about what was the historical cost of each item, because that's going to be what you paid for and what you spent in order to invest in it, not what it's currently worth right now. Because a big factor is we've already added back in the depreciation expense. So therefore, we don't want to take it out again and defeat the purpose of this. So we need to go back to our unadjusted trial balance to get the actual historical value and historical cost of each item that we purchased. So in this case, starting out with our furniture, right? Since we spent the money, right? We don't have the money anymore, right? Because we invested into the company, right? So therefore, it's going to be a negative number because we don't have that cash anymore. We already spent it. We paid for it, right? So you need to go to your unadjusted trial balance to go to your each account. So my furniture account, right, was a total of $9,033.75. That's the money that we spent to buy furniture. Okay. What about office equipment? How much money did I spend to purchase office equipment? We spent $2,873.20. So remember, we're looking at the unadjusted version, right? Because that's the historical cost. Okay. And then equipment, right? How much money did we spend to purchase the equipment? We spent $8,650.86. And last but not least, how much did we purchase the vehicle for? We purchased it for $32,208.90. Okay. So once again, I need to figure out and determine how much my total investing activities was. So equal sum this. Okay. And I get a total of $52,756.71. Okay? That's how much money I spent in order to invest into my company. So, you're going to take your net operating activities, okay? And you're going to subtract out your total investing activities, okay? And you should get negative $41,419.59. Okay? So that's quite a lot of money that we spent for investing activities. Okay? All right. So next section is going to be your financing activities, right? In this case, straightforward, it's going to be your long-term liabilities as well as your equity. So let's take a look at my balance sheet, okay? So we already eliminated everything so far. So we skipped loans. Loans is going to be a financing activity because when we purchased or when we got a loan, what did we get out of it? We got cash value, right? We end up getting money. Okay, so I have to format this to up here. Okay, so since I got a loan and it allowed me to gain money, how much was the loan for? In this case, once again, this one, you should be able to use this one just because that's what your current loan is, because we already subtracted out the small amount from and we included into our accounts payable. So in this case, this number is fine. Okay. We borrowed $28,372.09, right? Right? That's money that we have. Right? Next thing that we have to take a look at is going to be my equity. Now, in this case, right, we can't take a look at equity because we don't have all the information in equity, right? This was my net income included into the equity, all right? So you have a couple choices. You can either go to your statement of equity, or you could go to your unadjusted trial balance or adjusted trial balance to be able to get this number. I'm just going to go ahead and go to the unadjusted because I've mentioned that we have to use the unadjusted. So in this case, right, we had owner's equity. Okay, that we consider that to be your original investment into the company. Okay, so owner's equity. Since we had to invest our own money into the company, how much money did we invest? Well, we invested, we invested $30,000 into the company. Okay? All right? So therefore, that means that's money that we had to supply my business because we put money into the company. Okay? But however, right, we ended up withdrawing some money from the company. So therefore, that's going to take away cash that we don't have into our company, which we took out $3,000. Okay, so there you go. Go ahead and equal sum this, and you should get a grand total of $55,372.09. Okay. And that is where now, since that's our financing activities, we now need to add that to our net right now to find out how much cash we should be having. Okay? So we have $13,952.50 remaining. Okay? And then we're going to take a look at our beginning cash as of June 1st. Well, in this case, we didn't have a bank account, so our assumption is 0. So therefore, the cash that you should have as of June 30th is going to be your net plus your cash that you began with. In this case, I didn't open my bank account until June 1st. I didn't have any money. So therefore, your ending balance in your bank account should be $13,952.50. And is that true? Take a look at your balance sheet. I have $13,952.50 in my bank account. So yes, it is true. All right? And that's how you complete the statement of cash flows. Okay? Any questions? This is one of the more difficult financial statements you have to complete because you have to constantly keep asking yourself, did I buy this? Did I pay for that? Do I have this? Do I have that? Right? Any questions for the statement of cash flows and all the statements that we just completed?
So mostly for all the accounts that we need for cash flows comes from balance sheets, from the balance sheet, um,
Mm-hmm.
except for equity or debt equity part or
Well,
financial
okay,
equity.
so in this case, right, it is a combination between the income statement and the balance sheet. So we did pick a few things up from the income statement, right, such as the net income and all of the non-cash transactions. And then yes, you would definitely use your balance sheet for the rest of the information. However, the balance sheet includes all the adjusted values. So you have to use your unadjusted trial balance to plug in all those extra numbers that you need to have. But yes, except for equity, that's just because that's part of financing. And on your balance sheet, right, it includes the updated equity, right?
Mm-hmm.
But in most cases, yes, you would just take that number and obviously subtract your net income to get these values that we have here. Okay. Well, yep, this is it. So again, it's a combination between your income statement and your statement of and your balance sheet. Okay. All right. Any questions in regards to anything that we learned in the financial statements? Okay. And remember, once you get your net operating, investing, and net financing, the purpose of this is to see, well, how much money did you start in your bank account as of June 1st? Well, we didn't open our bank account, so we had 0, right? And then the question is, so that means at the end of June 30th, your bank account should be now $13,952.50, which we know is true because that is what it says in our balance sheet. So a lot of matching numbers between the different financial worksheets that we just completed. All right. So this is where everything is coming together and everything that you plug in should start lining up and matching each other. All right. Any other questions?
Mm, no.
All right. Let me go ahead and